In today's stock analysis, we are going to examine the key pillars, look at past results, see what the analysts' predictions are, create a valuation, and review then rate the company. Today we are going to look at Advanced Micro Devices, Inc. Ticker, AMD. Let's dive into the process I follow when reviewing whether or not to invest in a company. After I've collected all the financial information, I then analyze what I consider to be the 12 key pillars. These pillars are based on the insights and teachings of the best super investors and what I consider to be the key metrics when evaluating a company. Ideally, we would like to see each of these metrics be at least 10%. The first pillar is earnings per share growth. This is where we take the net income and divide it by the shares outstanding. For AMD, EPS growth over the past 12 months is 113%, scoring 1 point. Next, let's look at free cash flow growth, which measures the money a business can generate from its operations. Warren Buffett emphasizes the importance of strong financial health and prefers companies that can generate substantial free cash flow. AMD's free cash flow growth is 37%, scoring 1 point. Next, we come to revenue growth, which tells us how good the company is at generating income before deducting expenses. Their revenue growth is 6%, scoring 0.5 points. Now let's turn to book value growth, calculated by subtracting total liabilities from total assets to indicate equity growth for the company. Phil Town believes book value growth is the most important metric, as it has the interest of the shareholders at heart. For the last 12 months, AMD's book value growth is 1%, scoring 0 points. We then assess the management of the business by looking at return on invested capital and return on equity. These measures allow us to evaluate a company's efficiency at allocating capital. For AMD, return on invested capital is 3%, and return on equity is 3%, scoring 0 points for each. Now we move on to debt. Joel Greenblatt prefers companies that are able to pay off debt with their free cash flow, ideally within 3 years. It would take AMD just under 1.5 years to pay off the debt, scoring 1 point. With the information we have gathered, it tells us that aspects of the key pillars are strong, but others could raise red flags. So, let's find out more. Help support the channel by tapping the like icon if you have found the information helpful, and click on the notification bell to get alerts about my next videos. Now we will focus on other key pillars which help define an excellent business. Let's look at the gross margin, which indicates how much money a company retains after incurring the direct costs of producing its goods or services. This is currently at 52%, scoring 1 point. Next, we come to the operating profit margin, which tells us how much profit a company makes on $1 of sales after production costs but before interest or tax. Peter Lynch prefers companies with strong operating margins when assessing their financial health and competitive advantage. AMD's operating profit margin is 9%, scoring 0.5 points. Free cash flow yield provides a more realistic view of a business's financial health. Terry Smith prefers companies with a free cash flow yield of 5% or higher. AMD's free cash flow yield is 0.74%, significantly below the target, scoring 0 points. Next, we assess the 10-year book value growth as potential shareholders. For AMD, this is an impressive 58%, scoring 1 point. Lastly, Bill Miller believes earnings growth is the biggest indicator of a company's stock price. The 5-year net income growth, which evaluates the company's profitability over time, is 136%, scoring 1 point. In the comments section, I've included a link to the Investors Page and the annual report if you want to check it out for yourself. AMD has demonstrated steady growth and resilience over the last 5 years. The stock's average closing price is $114.67, with consistent trading volume averaging 144 million shares. Recent highs saw the stock trading at $197.62 in December 2024. Over the past few years, AMD has benefited from robust revenue growth and a strong focus on expanding its product portfolio, catering to the semiconductor market. However, competitive pressures from peers like Intel and Nvidia remain a factor to watch. Looking at the overview, we can see the current market cap is $212.39 billion. They are currently generating $24.30 billion in revenue for the trailing 12 months and have 1.62 billion shares outstanding. At present, their earnings per share tells us that for each share of stock, the company is generating $1.13. Their PE ratio is 116, which is much higher than the S&P 500 average of about 28. The overall consensus among analysts is a strong buy, with a price target of $195. Analysts are forecasting between 14% and 54% growth starting in 2025. This scores a check. Let's calculate a valuation. I will use AMD's current earnings per share of $1.12. Combining historical growth rates and future analyst predictions, I estimate an EPS growth of 30%. Assigning a forward PE ratio of 30, projecting 10 years forward, and applying a desired return rate of 15%, this results in a future stock price of about $463. Using the sticker price methodology, the current intrinsic value is about $115, with a 25% margin of safety price of $86. Since the current price of $131 is above the buy price, this scores across. It all depends on your personal view and outlook for the company, as well as the return on the investment you would like to see. When reviewing the key pillars, AMD scored 7 out of 12, earning a check. Over the last 5 years, their stock price has shown upward momentum, scoring another check. Analysts are predicting growth of 14% to 54%, scoring a check. The current price is above the buy price, scoring a cross. According to Morningstar, AMD has a narrow moat, earning a check. My final overall rating is 4 out of 5 stars. I've placed this stock in category B on my stock watch list, noting it has solid growth potential but comes with moderate risk. Thank you for joining me in today's analysis. Don't forget to like and subscribe for more insights.